Bring it on. Wall Street gears up for Alibaba's historic IPO. In today's cover story, iPhone fans line up for the newest gadget from Apple. Plus, currency concerns, political drama in Scotland could have a worldwide ripple effect. And in Traders Unplugged, is the fascination with the Fed getting old? First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, everybody. I'm Angela Miles. It's Friday, September 19th. In today's First Look, the biggest IPO ever in the U.S. opens for trading today. Alibaba priced in last night at $68, the high end of the range. Shares are set to trade under the ticker BABA. Well, as Yahoo stands to make billions on its stake in Alibaba, an analyst from BGC Partners speculates Yahoo may make a bid for AOL. A bombshell from Oracle. Larry Ellison is exiting his job as CEO. Mark Hurd and Safra Catz will become co-leaders of the software giant. Taking off, JetBlue CEO Dave Barger plans to retire in February. JetBlue stock soared 4% after the close last night. The Wall Street Journal reports Russian brewer Oasis wants to buy Pabst Blue Ribbon, and stocks on a high. The Dow and S&P closed in record territory yesterday as commodities sold off. Well, trader Daniel Stessich of Athena Advisors is ready to dive into this trading day. Will it be a wild one?
Well, you know, we have this Alibaba IPO, and I have better chance of making money by buying the book Alibaba and the 40 Thieves, figuring out how to open the cave saying open sesame, than I will on this IPO. So, you know, that's going to be the early part of it, the Scottish independence. So we've got a lot to look forward to, but we'll see what goes for the balance of the day here.
Well, here's a bombshell. Larry Ellison, the founder of Oracle, is stepping down as CEO. What do you think about that stock?
Whenever you have news like this, right after the announcement, the market came off a little bit. We'll have to see how this goes. They also, I believe their earnings and revenues weren't quite what they expected. But if you look at this company long term, they were near their 52-week highs. They've come off a little bit. Watch this stock for a couple days and maybe make a reevaluation at buying it. It looks like it might be a buy, but you're going to have to pay close attention.
The stock market is still on fire. Is this record run due to the Fed this week?
All QE all the time. You know, they're tapering on the QE, but they said they left a considerable time period on there. But if you read between the lines, at least the paragraphs that I read, Janet Yellen is looking at employment, and I think that's going to be her trigger. If that gets ahead of her, they might make a move on the considerable time and then possibly start raising rates at that point. But for now, it's still looking pretty good. We're at high levels. A little profit taking won't be a big surprise.
Good to have you on our show this morning. Thank you, Daniel.
Happy to be here. Thank you.
Chuck Coppola is standing by with more on Alibaba. Good morning, Chuck.
Angie, when Willie Mays hit home runs, the call used to be bye bye baby. Now a twist of that call applies to the latest home run from China, Alibaba, whose stock ticker is BABA. The Chinese amalgam of Amazon.com and Google says it will raise $21.8 billion in its initial stock sale that opens today. It is a 15-year-old company and is considered an investment opportunity for those seeking access to China's growing middle class and internet-savvy shoppers.
They control about 80% of all e-commerce in China. And investors are looking at this as a way to own the digital economy in China.
Smith says the stock price at $68 per share will likely be too high for many retail investors who may opt for shares of Alibaba through an ETF, exchange-traded fund.
The word Alibaba has dominated Wall Street for weeks now. But what about Main Street? We put everyday people in the spotlight to find out what they know about the Alibaba IPO.
Alibaba? I don't know.
Isn't it from Aladdin or something?
It's the Amazon of China?
I don't know. I read about it and I know it's got a lot of negative press.
I believe it's a company based in China that is, I'm not sure exactly what they do overseas. I know Yahoo's involved.
Close enough. No doubt if that stock takes off like a rocket, more people will be talking about Alibaba.
In today's cover story, the doors will open into a brilliant white space, and the Apple faithful who've waited patiently in line for 2 days shall receive their new iPhones. The line that began Wednesday afternoon in Chicago had more than 24 people and went around the block. Web designers and mobile app developers staked out their claims at the front of the line first.
I'll probably get the iPhone 6. I think the iPhone 6 Plus is a little big for me.
Apple stores, Best Buy, AT&T, and Verizon all plan 8 a.m. openings to sell iPhone 6 as low as $200 and the 6 Plus as low as $300. The Apple Watch not yet for sale until early next year.
I can wait on that. I am excited about it, but right now it's all about just getting this new phone.
When it does come out, do you think you'll buy the watch also?
Yes.
A scandal recently over security threatened to shake some of their faith. First, nude photos of celebrities were believed hacked from the iCloud.
The way that the content was accessed actually wasn't in any way a breach of their security. It was simply either weak passwords, passwords had been used for other accounts which had been revealed in leaks.
And some are a little wary of Apple Pay, which extends consumers' use of their iPhones for purchases.
I'll use Apple Pay if it depends how much it's out. You know, I've only seen it in cabs, so if it's everywhere, I'll use it. I am kind of skeptical because all my information is on my card, and if I lose it, what will happen?
Apple has since strengthened security measures, including password protection. And CEO Tim Cook tried to reassure consumers with this note posted on the company's website, saying, "We don't monetize the information you store on your iPhone or in iCloud. And we don't read your email or your messages to get information to market to you."
I did like the way Tim Cook addressed it, and I think that is a big issue to me, is the fact that Apple does come out and say, we are not in the business of collecting your data. I think that kind of makes a huge difference between them and Google.
There are also numerous offers from stores and carriers to encourage trade-ins, older iPhones, some with credits toward also a new iPad.
As fans rush out to buy the new iPhones, analysts are already calculating what sales of Apple's latest gadgets will mean to its bottom line. A tech analyst at Bernstein predicts the tech giant will sell between 7 and 9 million smartphones over the weekend. However, some predictions place that number at 10 million or more. And while the new iPhones will likely be the talk of the town this Christmas, tech analyst Rob Enderle says, hold the phone. It's post-holiday sales of the new models that really count.
One of the things we're going to be watching pretty closely is not the sales in the fourth quarter. They'll sell every phone they've got. It's the sales in the first quarter, because that's when you roll through the Apple churn and start moving to the general market.
Apple investors have been pushing the stock higher in hopes of a larger rally still to come. Shares closed last at $101. On
to another big headline story, the vote over independence in Scotland. Scotland contributes about 10% to the United Kingdom's GDP. And analysts say after the election there could be an exodus from the British pound. The pound has jumped against the dollar during the past couple of weeks. Money managers at the Morningstar ETF conference suggest more countries seeking independence could put a crimp on the global economy.
We like to think that over the last couple of decades, the world has moved to be more global, and that's had a downstream positive effect on capital markets, right? But it appears in the last few years that parts of the world, and pockets of it, are moving to be less global. And this would certainly be grounds for being less global and more inward focused. And that is not a positive trend for economic growth worldwide.
One other note on currencies, portfolio managers say that the Swiss franc is still viewed as one of the top safe haven plays in times of global economic jitters. Over in the Emerald Isle, that economy is seeing more green. Ireland's economy is now the strongest in the Eurozone. Its GDP rose 1.5% in the second quarter and was up 7.7% from the second quarter last year. Improving economies in the U.S. and U.K. are driving demand for Ireland's exports of big pharma and chemicals. Economists are now saying that Ireland's recession is officially over. American families are still dealing with a recession hangover. That's according to Fed Chair Janet Yellen, who turned her focus to Main Street in a speech yesterday in Washington, D.C. Yellen says the financial crisis revealed that many Americans are economically vulnerable with little in savings. She says the median net worth by households among the bottom fifth of households by income was just $6,400 last year. Yellen's comments followed the two-day Fed meeting where the Federal Reserve decided to keep interest rates near record lows, citing the sluggish labor market. The rise of the renter is behind a surge in apartment building. Last month, construction numbers collapsed 14.4%. However, during the past year, apartment construction has escalated 19.2%, while single-family starts are up just 4.2%. Jed Kolko, chief economist at Trulia, says there's no cause for concern about overbuilding of apartments.
there are still a lot of young people living with their parents who haven't moved out yet. When they do, they'll be renting first before they buy. I expect we're going to continue to see a lot of new rental demand as the economy improves. So I don't think it's time to worry that we're overbuilding on the multifamily side yet.
Kolko adds the upside to the steady stream of apartments going up is it could bring relief to renters' wallets if there's an abundant supply of units for rent.
56 million. That's the number of people affected by Home Depot's data breach. Retailer released new details on the hack attack this week. It says it has eliminated the malicious software or malware used by hackers to enter its system. The company is increasing its earnings forecast for the year, but says that does not include costs related to the breach. The hack attack is bigger than Target's, which hit about 40 million consumers.
In our earnings watch this morning, Conagra Foods outpaced analysts' expectations. The first quarter earnings more than tripled as Conagra lowered its expenses. Conagra produces egg beaters and other popular products. The company backed its full-year outlook. Shares ran up 4% yesterday. Rite Aid also tripled on earnings. However, the pharmacy chain reduced its forecast for the year. Investors reduced the stock by 18%.
Walmart's getting into the holiday hiring spirit. The retailer plans to bring on 60,000 temporary workers. That's a 10% increase over last year. The company says current employees will get their pick of hours. Walmart's been under fire for offering low pay and limited hours to its employees. UPS, FedEx, and Kohl's are also increasing holiday hours.
And the economic calendar for today is light, only leading indicators to look forward to. Still to come, more on the Alibaba phenomenon, including a trader who says he's staying away. Plus, does McDonald's need a lifeline? And after the break, why financial planners are flooding Times Square. Stay with us.
American wealth rises to a record as the stock market races higher. The Federal Reserve says household wealth rose nearly 2% in the second quarter to $81.5 trillion. Stock and mutual fund portfolios gained $1 trillion. Home values increased $230 billion. However, households also added the most debt in 5 years due to student and auto loans. And the wealth is going mostly to the wealthy.
Financial planners are taking over Times Square this week. They are in New York doling out free investing advice. Nicholas Stuhler, CEO of Advice IQ, came up with the idea of taking it to the streets. Good morning, and what's your goal?
The goal of National Financial Advisor Week in Times Square is to educate investors that no matter how rich they are or poor they think they are, they can get a financial advisor that's vetted, trustworthy, that wants them as a client. Because the problem in America is about 50 million American households don't have a financial advisor, and the reasons they don't have one are for wrong reasons. They think that they don't have enough money, they think that they don't have any issues that can be fixed, and there's a whole host of they don't trust. And the reality is every investor can and should get an advisor.
As you are well aware, there are cases of investors getting swindled by financial planners. So what's your advice here?
A lot of things. Number one, when someone tells you something that sounds a little too good to be true, it might be too, it might not be correct. So dig very, very deep. The second thing is when you have an account, it should be with a third party. If you have an advisor from ABC firm, where the money is held is usually at a different firm. And then the third thing is, if you don't understand it, get a second opinion. Have another trusted advisor review what someone is offering you.
The S&P and Dow are at all-time highs. Is now the right time for first-time investors to get into the stock market?
Well, that's the age-old question, but the experts over the last 3 days here at National Financial Advisor Week have been saying that in many cases the market is not overvalued, but really you should be in the market at the appropriate levels over the long haul.
Well, today is the final day. You will be in Times Square. What are some questions you are hearing from the audience?
Big concerns are, when can I retire? How much do I need to retire? In the withdrawal age, how much money can I withdraw every year? And am I going to outlive my money? Outliving your money is a big, big issue these days.
Well, thank you for taking time out today to talk with us.
Thank you.
Coming up, a trader who's staying as far away from Alibaba as possible today. And after the break, is Fed obsession going overboard? That's next in Traders Unplugged. Exciting times are about to unleash as Alan Nuckman and Scott Shellady prepare to square off and Traders Unplug. Let's jump into round number one, gentlemen. Rate hate. The Fed's interest rate policy is not unprecedented. Is there too much concern about when rates will finally rise?
This is a very touchy subject for some, so boom goes your head. It's been 2,600 days, 6 years, and I'm going to use the words inherited. Barack Obama, this administration, inherited the zero rate policy. There have been no changes for a record now 2,600 days. I don't know why anyone thinks it's better to be hawkish and raise rates. What would be the benefit?
Well, I'll shorten that up for you and make it simpler. At the end of the day, in this industry, I'm embarrassed to say that we've been focusing on words like considerable amount of time. I mean, is that really what my job's come down to? Why don't we lift our faces up from the books and take a look around and realize things aren't that good? And
so we shouldn't raise rates.
So we're not going to raise rates because things aren't that good. So I'm going to say this, is what we have to look out, not down, to make sure that we keep the interest rate policy where it needs to be.
Round number two, McDoom. Mark Faber, the well-known investor and author of the Gloom, Boom, and Doom report, believes the decline of McDonald's sales and its stock signals a drop in the global economy and a 50% stock market plunge. Can you hang that much on hamburgers?
No, I'm leaving this to you because you had used the same McDonald's thesis.
Here, I'll jump in. You know why he's leaving it to me? He's never been there, all right? He's an elitist. But I'll tell you right now, if the man on the street can't afford McDonald's anymore, of course they can't afford the stock anymore. And the reason why they can't afford McDonald's anymore is because look up and look around you. Housing starts stink. The economy's not doing well. At the end of the day, it's all about the economy. So here we go. The stock market's higher. He's going to tell you that the economy's doing great.
You had told me before, play the tape, you had said before that McDonald's is going to bounce because the economy's weakening. So you can't have it both ways. You both have the same thesis that the market's going down.
We've gone over the hill.
But for different reasons.
We've gone over the hill.
Now things are worse?
Yeah.
Round three, Tech Check. Alibaba said no to its IPO on the NASDAQ, where the company would have made an extra $2 billion, and it was because of the Facebook NASDAQ debacle. What's the winning investment now, Alibaba, Facebook, or shares of the NASDAQ?
I think Alibaba's played this perfectly. It's going to be a stimulus for the markets. Innovation, that's what drives the markets. Facebook has about a 15% upside based on the technical sell-off that we saw. And I'm going to say this, NDX, NASDAQ, 5,000.
I'm going to say pacemaker. Here we go. At the end of the day, if he or anybody else tries to tell you to sell any other shares to get into the Alibaba thing, they're wrong, number one. And number two, they should just tell you to sell your shares. I think that anybody that thinks about getting into the tech sector now, after the gains that we've seen, is absolutely crazy. Let it breathe. You'll have better levels. Take it easy.
Here's your bonus round question for today. We are testing your Alibaba knowledge. Which statement is false? Is it Jack Ma was an English teacher when he started the site in a one-bedroom apartment? Ma started up the site with $60,000 he borrowed from 18 people. Or Ma discovered the internet in 1995 while in Seattle. The first word he searched for on the net was greed.
All of them are true.
Number three is false.
Oh, yeah, because he used a different word, China. You put in China.
The word he searched for was beer.
Beer?
He's wrong 3 times on one question. That's awesome.
Thanks for being on the show today, guys. First Business continues right after this. Tim Bingham of Trading Block joins us now with some final thoughts on this trading day. Good morning to you, Tim.
Good morning, Angie.
Let's start with Alibaba. I'm guessing you are staying away from this trade.
To start with, too, I'm one of the few guys who doesn't want his Baba right away. So we'll wait and see, where it kind of, pans out over the next couple weeks. Let valuation take its course. But, yeah, this thing should be red hot, to say the least, early on.
Is there anything that you would trade because of Alibaba on the market?
Yeah, maybe look at, what was sold down, in anticipation of Alibaba coming. So, some of those names like Amazon, some related names certainly, where a lot of fund managers were in essence making room to put Alibaba in their portfolio. So I'm looking at names like Amazon, which came down sharply, I think because that's the biggest direct competitor to Alibaba. And, Yahoo maybe the other way. I think that might have gotten a little ahead of itself here. So maybe looking to trim out of some Yahoo as well.
What do you think of the overall market conditions, Tim?
I think it's a trade-off. We're starting to get to, valuation levels, certainly on price to sales that are extreme, but, interest rates are virtually zero, so it's a yin and yang. I think we'll probably be stuck around here, big range, no change, sideways market, especially given the veracity of the rally recently.
Thank you, Tim, and have a wonderful weekend.
You bet. Thank you, Angie.
Well, what a week. That wraps it up for now. Coming up Monday on our show, investing overseas. Is it time to put money to work in other countries such as China or even Russia? Find out next week. From all of us at First Business, have a great Friday.